Hello, you probably know there is a massive short squeeze happening on a meme stock called GameStop, and you've probably seen this plastered all over the news.
Big picture? It absolutely is a pushback against the establishment. It's almost as if these social media platforms, there's this online populism that is pushing back at the Wall Street insiders and the Wall Street elite.
I'm about to share with you one stock that I believe could likely blow up big, the same way GameStop has, and flush out these giant hedge funds in a similar way. But better still, this company has solid fundamentals with a strong game plan moving forwards, and more importantly, is currently driving under the radar. But it is definitely one that I think will grow big in the coming years, which means it could be the ugly duckling of the meme stock world right now. Stick around. You cannot afford to be in the dark on this stock. Keep it simple. For those of you new to the channel, I am the Simple Trader. I share with you explosive growth stocks that I'm buying, looking to buy, or already have sitting in my freedom portfolio. I am not a financial advisor, so please understand this is all just for entertainment only. Full disclosure, I do not hold any Excel stock at the time of recording, but I'm certainly looking to load up big in the next coming few days. No more plugging, let's start drilling. Okay, over the last 2 weeks we have seen a short squeeze so epic in proportion that it has no precedent, and guess what? It's not over yet. Simply put, a group of average investor Joes on the now infamous subreddit WallStreetBets, or as Chamath Palihapitiya puts it, the largest hedge fund in the world, except it's completely decentralized and entirely democratic, started what I would call a crusade to fight back against the establishment.
You fight with the strength of many men, Sir Knight,
who for years have been shorting, destroying and bankrupting companies for personal and monetary gains. How do they do this? Well, according to some, it was started by the user Jeff Amazon, what a name, who gave a full deep dive into the company GameStop and presented what appeared to be a hilarious situation building up where the big hedge funds had literally gotten so greedy that they had managed to short GameStop stock by over 100% of the total float. So to cut to the chase, what happened was a barrage of retail investors buying, holding and refusing to sell any GME stock, thus squeezing these shorts, who then have to buy back the shares at higher prices to close out their short positions, which then created the snowball effect of pushing the price of GameStop further to the heavens. On Thursday, what happened to me can only be described as the most blatant market manipulation in the history of the world, as trading app broker Robinhood barred their users from buying GME and other explosive meme stocks. But check this, allowing their users to sell. The price of GME and others like AMC and BB all plummeted on this. Robinhood founder Vlad comes out to describe they did this because they preempted what would have been a liquidation problem with Robinhood if they had allowed their users to continue buying. I ain't buying that. Anyway, the real squeezing should be happening this week as hedge funds look to close out their short positions in order to cover their losses. It really is a cat and mouse game this week, and although I only managed to pick up 5 shares of GME, I feel like I'm in it for the ride and supporting the cause. I'm in it either to the moon or to the bottom of the ocean. Either way, I ain't selling. I think it will be interesting to see what other tactics the big boys can deploy. This coming week may well go down in history if we, the average Joes, can topple these Wall Street dark suits. Okay, this brings us on to what I believe could be the next big play, following on from the obvious GME and AMC that are blowing up due to short squeezes. Before we even dive into XL Fleet, let's just note that the current percentage short on XL stock, according to Finviz, is 72%. Yes, 72%. That should be raising eyebrows, but it seems this stock has not caught on yet. What is raising my interest is the float is extremely low at 8.26 million shares, and with 72% of that short. That means if there is sufficient buying and holding over the 28% or roughly 2.3 million shares threshold, then essentially we could see another massive potential short squeeze in the making. And guess what, guys? This is already DD'd on none other than WallStreetBets and is already being talked about as the next big play. So please keep an eye on this if you missed the boat on GME. Okay, so XL Fleet and Pivotal Investment Corporation 2 completed their merger on the 21st of December and began trading under the new ticker symbol XL. The price of XL exploded 86% in one day following this announcement and the certain pumping up of the stock by Jim Cramer, and I quote, "I think the stock could be a steal.
So here's the deal. XL Fleets developed an electrified powertrain that transforms fossil fuel powered trucks into hybrids as they're manufactured. As the company sees it, electric vehicles are the future of trucking. But it might take a long time to get there if we wait on the automakers. And that's why XL Fleets come up with their customer-tailored approach. They're trying to accelerate the process. Every year we spend over $1 trillion in commercial vehicle fleets. Now there's a total addressable market. If XL Fleet can get even close to hitting its forecast for 2022 or 2023, and we get some clarity on that relationship with Ford and the F-150, this stock is cheap, darn cheap. Something like QuantumScape trades at 10 times its 2027 sales forecast. XL Fleet would be trading at 3.3 times its 2023 forecast. Bottom line, with Pivotal Investment trading at $15 going to the XL Fleet merger, I think this stock could be a steal.
Since that high of $35, it has pulled back to the $19 to $22 range where it is currently consolidating quite nicely. XL Fleet, simply put, provides electrification solutions with proven proprietary technology and electrification systems and solutions to a wide range of existing vehicle classes and types already on the road. Simply put, think of them as a company that can upgrade existing vehicles and fleets with either hybrid transmission technology, plug-in hybrid, or even fully EV technology, making them a serious player in the current market considering Biden's push for decarbonization. Simply scrapping and selling thousands of vehicles is not a good choice in my opinion, and it's simply not the most sustainable and renewable way forward. In the short to mid-term, upgrading existing vehicle stock seems the most practical, cost-efficient and sustainable way forward. This is why I believe XL Fleet have found a serious niche in the market that could set them up to succeed big time. Think about it this way. If I owned a fleet of delivery vehicles and knowing the government may impose various carbon taxes in the coming future, I wouldn't want to, or maybe I cannot afford to, scrap all my existing fleet and go and buy hundreds of new EV vehicles. Instead, what XL Fleet offers is highly attractive, as I can simply imagine upgrading, to coin the phrase, all my existing vehicles and be done with it. But it doesn't end there. According to the presentation and assumed over a 10-year service life, by upgrading a vehicle to XL Fleet's technology, the savings alone would provide a 55% net return on the original investment. So, in effect, the savings over 10 years covers the initial cost and then some. This is huge and is a big consideration I can imagine for any large fleet owner today. The investor prospectus that was issued before the merger estimated an implied enterprise value of $1.1 billion. It's safe to say XL have blown this up and then some, and has now got a market cap of around $2.5 billion. They also have an estimated $350 million in estimated cash in trust and PIPE proceeds following the merger, and they have highlighted their plan to use these funds, which are extremely bullish to me, as every penny is set to be pumped back into the company for future growth, R&D and expansion purposes. The CEO and founder of XL Fleet gives me huge confidence moving forwards. As an MIT alumni with past experience in all things clean energy before starting XL Fleet, I believe he has the passion, the drive and the knowledge to take XL Fleet forward and grow it to become a massive EV and clean energy vehicle player in the world. Their projected revenue growth is exponential. They are projecting a revenue of $1.377 billion by 2024. That is insane, and that is based on a 6% market penetration in North America only. They are also projecting positive EBITDA by 2022, which is huge. That's just next year. Think how many years it took Tesla to get to positive EBITDA. Their existing customer base indicates they are already actively helping to drive decarbonization, no pun intended, and it's simply huge as it includes big players such as DHL, FedEx, Coca-Cola and PepsiCo, for example. We also have two analysts, BTIG Research and Canaccord Genuity, both initiating a buy rating with a price target of, check this, $30, which means they think this stock is hugely undervalued. What about competition? Well, we know that EV space has literally blown up in recent months, but when we look at the true competitors of XL, we have room to be comfortable in. Based on 2020 sales alone, we can see that XL Fleet dominates dominated the market in terms of going against key players such as Hyliion, Workhorse and Lordstown. The projected 2021 sales is looking extremely disproportionate too, barring a major win for Workhorse in the USPS deal, that is. To summarize, as you can see, I think there is huge upside potential to XL Fleet. It was pumped to $35 off a Kramer review. Think about that. It has solid fundamentals, a big and growing client base, and a clear path they have set out to grow the company with the proceeds gained from the merger. Put together the additional cash they have raised from the exercising of the warrants, their balance sheet is looking strong moving forwards. Adding to that, the stock price is now back below $20 levels, and for me, this is, to use Kramer's phrase, a steal. Throw in the mix of the GME saga. This is what my coming game plan is. I will look to buy as many shares as I can and hold to at least $40, where I will consider liquidating my original capital. This could take 6 months to a year based on my analysis, but that's just my opinion. Based on solid fundamentals, this stock is a winner long term, and I really cannot see this going south unless something huge fundamentally breaks down or changes. Now, conversely, the play if this blows up in the next few weeks or days due to a short squeeze, and if the price blows up like GME or AMC, is I will likely hold for a $60 to $80 price target before liquidating enough shares to cover my initial investment. Then I will simply put the rest away and not look at them for 1 year, simply because I believe the stock at under $20 levels is a guaranteed payout in a mid to long term time frame, regardless of any pump or squeeze. Of course, that does depend on how far the squeeze goes, if it does happen, and how much the price gets pushed up. Okay, this is high speculation, and it is a big if XL Fleet goes on a short squeeze. It really depends on the magnitude of the move. I am of course hoping to attain free shares via house money in a great company together with some profits to go with it. Let me know your thoughts on this and what your play on this stock is. That is of course if you will be diving in. My final thoughts are, if any company has a high shorted percentage float and if you think it has solid fundamentals, this is almost a clear win-win. I previously won big on Nordstrom stock, and I covered this in my previous videos when I bought in at $12, as it had a short of 40% plus on float. It didn't really explode like GME, but it gradually went up to around $40, representing an almost 3.5x on my original capital. I really think XL Fleet will follow suit, but it is more ridiculous as its current short on float is 70% plus. Do note the risk of any investment though, and I would say this: if you want to get into XL Fleet for a short-term explosion, then this may not happen, as no one can predict these things, and you may end up having to hold long if you do not want to take a loss, or you may have to take a small loss if you cannot hold long, if that makes sense. Thank you for watching, and remember that I am looking to YOLO into XL Fleet big, so please do your own due diligence and only risk what you can afford to lose in these hyper risk plays. Speak to a professional before you look to invest any of your money. If you are interested in other huge growth stocks that I have in my portfolio, please check out my other videos. For more huge growth stock picks, analysis and updates, please stay tuned and just consider subscribing to my channel so you get the information first. I am The Simple Trader. I try to keep this simple, and I really hope we'll see you next time.